Welcome to Against the Odds. Everyone has a story. What's yours? Sharing your story can inspire and ultimately transform lives.
Okay, hello everyone. Welcome to another episode of Against the Odds, a show where we believe that everyone has a story. And when you share the story, it can inspire and often leads to some transformation. So today we're lucky to have a guest, Mr. Charles Njoya. I looked at his resume and it's like if I was going to talk about his resume, we would probably spend 5 minutes talking about him. So I'll just keep it short and let him introduce himself. Hello, sir, and thank you for being on the show.
Thank you so much. I am blessed to be on this show. And you asked who I am. My name is Charles Njoya. I'm a CPA at the base. I am a certified tax strategist and I'm a wealth coach. I help people structure their estates. I help them avoid taxes, mitigate taxes, and I help them build wealth. That's what I do.
Okay.
I've been doing this. I've been in the finance business for over 26 years now. And I'm a former associate partner for PwC. And I run a company called CPA and Advisors, where we basically structure people's estates. We help them with tax mitigation, and we help them build the American dream.
An appropriate time. As you can see, this talk is not scripted.
Yes.
We're just going to throw questions from the answers, and then we go from there.
Yes.
Now, this is an appropriate time for this because tax season is on us.
Yes.
So I think when we talk about what we talk about, I think it's going to be helpful to people, watching.
Absolutely.
And they may learn something. So let's start by, knowing you a little bit.
Yes.
How was growing up?
Growing up was, it was never easy. I grew up in a home of 7 kids. Actually, we were 8 from my mom. And earlier on in my life, I went to live with my uncle, great guy. And I grew up from the age of 9, I lived with my uncle. And this guy brought me up to there were periods when I went back and lived with my parents, and then I came back. So basically, I was brought up by my parents, my uncle, and my community.
The village.
Yes, and the village.
Okay.
And I left college. I graduated college in Cameroon. Lucky got a job with a company which was PricewaterhouseCoopers, which was really a dream for me because I joined a company that really traced my path. It really helped me along the way. 2 years down with PwC, I was relocated to the UK. I went to the UK where I qualified as a chartered accountant, still working for PwC.
Mm-hmm.
Then after just over 2.5 years, I moved back to Cameroon, to Africa. Basically not in Cameroon, I moved back to Africa. I was based in Gabon, but I was in charge of basically oil and gas exploration and production.
Okay.
I was doing the audits for group companies across the world. And I was going around Nigeria, Angola, Congo, all these places, and reporting mainly to the United States, to the UK, and so it took me all over the place. I was there across Africa for another 8 years. Then I moved to the United States.
Wow.
In the US, I was still with PwC again. With PwC, I was here for a couple of years, and then I moved out of PwC and started my own thing. Yes.
That's why I said at the beginning, I was looking at a resume and I was like, it's a long list of accomplishments and which is great. So part of this show, Against the Odds, it's to encourage people, inspire people. So what would you say to somebody who wants to become a chartered accountant?
It's a great profession, and I'll tell you why. The reason I think becoming a chartered accountant, a CPA, is great is because you don't have any limit. You could work in NASA, you could work in space, you have a job everywhere. It's not a particular field where you feel like you are limited to this. In every industry, you find CPAs, you find chartered accountants. And if you think about it, if you look at the Fortune's 500 companies, about 25% of them are led by chartered accountants. So somehow, and the reason is because CPAs, when you think about CPAs, you're thinking about people who are not only specialized in one thing. There are CPAs who are more tax specialists. They're dealing with the taxes. There are some who are industry specialists. There are some who are auditors. There are some who are controllers. I mean, in every sector, the CPAs in industries tend to be the people who know the company the most, because they are analyzing every dollar movement within the company, and it's spread across the company. I mean, the guys could be, that's why I think, in as much as we have all these, what we call, we have these companies that are, these sectors that are like the main sectors today. When you talk about those great sectors where you want to be, you're thinking about IT, you're talking about healthcare, you're talking about renewable energy and things like that. All of those places you find CPAs. So it's a great place for a young man who wants to be involved in the nation building. And it's also a great place for people to make money. They make money in CPA. The CPAs make money.
That's the glamorous point.
Yes.
Now, I'm thinking more like, what amount of work do you have to do? For somebody who wants to become a CPA, you have to have some work ethic, but how much work is it? What are the paths that can lead to a chartered accountant?
So if for someone who wants to go to school, you're going through school. I mean, today in most developed countries, you can become anything from anywhere. When I used to work for PwC, and I went like in the UK, in the US, when all these top companies, PwC, KPMG, Ernst & Young, Morgan's, I mean, all these people, all these large companies, when they want to hire people, they're not necessarily looking for students who did accounting in school. They're looking for engineers. They're looking for mathematicians. They bring them all into doing audits within the audit field of the company. When we joined PwC, I had most of my friends were engineers, they were this. You could be anything. What they do within the firm is that they train you to be able to get the license to become a CPA. To become a CPA, you don't necessarily have had an accounting background from school. To become a CPA is basically about you being able to go through the trainings of the firm and then also qualifying for the exams. There are requirements to it, and especially requirements to this one. It's basically when you want to write a CPA, in the US, for example, most states require you to have 150 units of credit. 150 means it's somewhere around MBA. You have to have a level of an MBA to get a CPA in most states in the United States. You need 150 credits, and then now you can apply. You do your credential evaluation, and then you start doing the exam. So it's not exclusive for someone who did accounting. It's not exclusive for someone who did finance, but it ends up being that particular field of education.
Okay.
That's basically it.
Wow.
Yes.
All right. This is tax season coming up.
Yes.
And I know a lot of people a lot of people are not educated, vis-a-vis taxes. Let's start by educating some of us, myself included, on how to go about taxes, how to go about mitigating, keeping money, of what taxes to pay and what, you get the gist of what I'm trying to say. So how would you help people? What would you tell people at this point in time when they're getting ready for taxes?
I tell people that I have seen a lot of people who say accounting is not my thing. I'm somebody, I'm not good at money. I'm not good at calculating some of these things. But if you want to win, you have to know how to count. You have to know how to do these basic things that have to do with accounting. And your tax, especially for those who are in America, taxation is, I tell people that the tax code is the basis of the American dream. And that's not only in America, but it's more so in capitalist countries, capitalist economies. Taxation, the tax code, is the basic thing that governs the economy. When you think about capitalist economies, a capitalist economy is that economy which is basically, you have small governments. It is run by the people. And amongst those people, you have any-type sharks. People are constantly trying to outsmart the others. But what does the government do? The government doesn't doesn't build roads. The government is not in the business of hiring people. The government is not in the business of building affordable housing, commercial property, getting businesses for people. All these things are out there for the people to actually do them themselves. What the government does is it sets the rules. It's a very small government. It sets the rules, and then we all play the game. That is a capitalist society. On the other hand, you have socialist societies where the government owns everything, and then they distribute those things to everybody. That's a completely different ballgame to a capitalist society like the United States. So, when you are thinking, why I say that the tax code is the main tool that they use to govern the economy, is when the government wants to promote a sector, what does it do? It gives incentives within the tax code for people who are going to do things in that area. It doesn't do anything. And then when the government wants to kill or wants to kill a particular sector, they just add more penalties. They give more. They kind of promote those laws that will make people not want to invest in it because there's no benefit in it. So the tax code is that basic document that will create your American dream. And for anyone who is in America, who is in any of these developed countries, what you must try to understand is how the system works. When you understand how the system works, then you can fit into that system. For example, in America, if you understand, most people are complaining that the top 1%, the top 3%, they don't pay any taxes. But if you understood the tax code, you will see why they don't pay taxes. If those rich people, those wealthy people are not paying taxes, it means that there's something in that tax code that they are using, because otherwise they will all be in jail. They are using something in the tax code that you too can utilize. And what you need to do is basically to try to understand that. That's why I tell people that the only thing that is holding us, Africans, from getting to where we want to go is our mindset. The day we land in this country, the day we get to the airport, even before we get to the airport, all of us, we are already dreaming of how much work we are going to work in this country. We came here to work. And we work more than anybody. You came to this is the 20, what's the day? This is Friday. Tomorrow, this is the 29th, is it?
Right.
29th
Yes.
of December. You see, all here is full of white guys. It's full of Americans. Well, all these offices are almost closed. You go out there, the car park is empty. Everybody's gone for vacation. But Africans are working. Immigrants are working. Why? We work hard, yet we struggle. The question is, why are we struggling? Because we don't understand the system. We don't understand how to take advantage of the tax code. My message has always been that if we all took time to change our mindsets and know that we can work with strategies, we can understand how the tax code works. If we get that understanding, we are all, and I say this very passionately, we are all going to find ourselves in the top 1%. Easily. Very easy. So to answer your questions, all of us, it's not only about taking my taxes and giving it to somebody by the roadside, or some guy who did taxes for 2 weeks and say, prepare my taxes for me. That's the wrong way to do it. Tax is the foundation. A tax return is the foundation of your wealth building in America. It is that document that you use to access any asset that you want to access. If you wanted to buy a property today, the first document you're being asked for is a tax. Is what?
Your tax.
2 years of your tax return. If you want to buy anything that's of value, you want to use other people's money, the first document they're asking for is your tax returns. So the question should be, if tax returns are so valuable, what is it in that return that these people are looking for? If I can understand those things that they are looking for, and I enhance it in that tax return, it means I get access to everything. That is the game. You have to understand it. Our mindsets are all tuned towards benefits. Many of us tuned towards benefits, thinking that, it's more about getting a refund at the year end. I want to get a refund. I want to get the and many people don't even report their income in their tax returns because somebody somewhere told them that, please, if you report that income, it's going to get you taxed. That is the wrong mindset. That's the mindset that gets you into abject poverty. Your mindset should be, how do I enhance that thing that gives me access to more of other people's money? How do I enhance that thing that helps me to get access to assets that I want to acquire? So as long as you're generating income, you should be able, if you did things right, to access wealth, to access assets. Assets are the base of wealth. If you don't have assets and you're only having income, you can make $1 million in America. If you made $1 million in America a year in taxes, do you know how much you pay in taxes? Okay, if you made $1 million in Texas, you off the bat, because Texas doesn't have state taxes,
Right.
you are going to pay $370,000 in taxes on that money, because 37% of that money is going to taxes. It's going to the IRS, because you're a higher income earner and you're paying the maximum tax rate. And then, if you were in a state like California, you pay an additional 13.3% state tax. So that takes you to 51% already of that money. And then, depending on the structure, wherever you are, because most people, when they start making money, they want to start getting maybe a 1099. Most people are getting 1099s and things. If you don't structure that money correctly, you're going to pay something called self-employment tax, which is an additional 15.3%.
Wow.
So when you think about all these tax elements, more than half of your income is going to somewhere. And if you're not planning for it, how do you not plan for more than half? Let's say you're just giving, even if it was 37% of your income going to somewhere, won't you be planning for that? That's where all your wealth is going. Because that money, the only reason, and I'll tell you this, I don't say this very clearly, the only reason you get tax more and more is because you didn't acquire assets. Again, let me repeat. The only reason you're paying crazy taxes is because you're stuck on the left side of your T structure. You're stuck in the left side, on that side where you're constantly working in operations. Because when you make what they call ordinary income, which is income from wages, income from active employment, from active work, that is the income that is paid, that is taxed the most. When you are constantly waking up, going to work, working for somebody, doing work, it is called ordinary income. It is called income from employment. It is not a passive income. So it's not income, it's income from your hard work. When you're working too hard, the system tends to tax you more. The reason being that at some point you're going to get tired of doing these things. Who is going to take care of you? The government will have to take care of you. You need benefits. You need social security. Government needs to take some money in order to prepare to take care of you. That's the way I see it. Even though the social security, it's already a Ponzi scheme right now. But if you were building assets with that energy, in that operating space where you are actively working, if you're working on, basically, if you're working on a kind of strategically building assets, those assets will come to wipe off your ordinary income. That's why the wealthy who have accumulated assets don't pay any taxes. That's why they don't pay taxes. Assets don't pay taxes. If they were to pay taxes, it is the middle class. It is mainly those people who are using those assets who pay all the taxes. You are only sleeping and getting access to the benefits. And the government, the tax code allows you to be able to take that asset and wipe off your ordinary income with it. That is the game. That is the American dream. The more you can acquire assets, the less you get taxed. So when you hear of this person who has a net worth of $500,000, of $1 billion, of things like that, those are not earnings that they are earning on a daily basis. Those are the assets that they've accumulated. They can use those assets to wipe off their ordinary income. Those are passive activity incomes. Yes. So that is basically some of the things I want to tell you. Take, for example, if you were a real estate professional, you're considered, being a real estate professional doesn't necessarily mean you're working in real estate. It means that you're putting in some hours managing real estate that allows the IRS to consider you a real estate professional, even if you're doing something else. So if you put in those hours, the IRS allows you to be able to, you bought a property like this one. Let's say you bought $500,000, you put it on the property. Your only investment in that property is maybe 10%, which is $50,000. Someone else is giving you $450,000 to invest in that. That person is called other people. It's the banking sector, it's other people's money. So you're basically buying that asset with other people's money. But instead, the code allows you, if you meet certain criteria, to take that asset and wipe off your ordinary income on it and not pay any tax. That's the crazy thing. So the game has to be, how do I accumulate as much assets as I can? Because the more I accumulate assets, the less taxes I pay. Yes.
Let's talk about the immigrant community.
Yes.
Who don't know all of this.
Yes.
How do we start getting to them? What somebody listening to you now in the coming tax season, what can they do to start mitigating those tax payments?
The first thing is to, you shouldn't rely always on the person preparing your taxes. The tax on your balance sheet is so important. The amount is so important that you have to start looking at it. Looking at it means that you have to take interest in understanding how these things work. If you are an entrepreneur, you want to know where your money is going. You don't rely on some CPA. And the first thing I'm going to tell you, CPAs are not strategists. What they do, they help you pay taxes. So when you employ a CPA, don't count on him to save you taxes. Because what he's basically doing is using your past historic information to calculate how much tax you have to pay. That's his job. Now, understanding how to avoid taxes is a whole different ballgame. It's not mainstream. You don't find that all over the place. Strategists are people who spend their time reading the tax code. They're looking at every loophole, every credit available. Whenever my client is spending money, I'm thinking, the way you're spending that money, can I take an advantage on that? So I need to work with my client prospectively rather than retrospectively. So to answer your question, we need to start taking interest in what's happening. Because when we go out there and we're working 20 hours a day, we are amassing more of ordinary income. And ordinary income, that's why you see people, I see a lot of nurses telling me, because I work a lot with physicians and people in the medical. I see a lot of nurses, they tell me, the more they're making money and they're not seeing the money because it's going all in taxes. Yeah, you're amassing ordinary income. Now you have to think. The things you have to do is, first of all, educate yourself. Change your mindset. If you want to pay, I am not cheap. And I say it, I'm not cheap. Because I invest a lot of time in making you get value. What I tell people is, when you're doing anything, the key is return on investment. What is my return on investment on this? If you want to do taxes for $200, you will see a lot of people out there who do taxes for $200. But if you ask them what is the meaning of every line that you have on a tax return, you don't understand it. They are putting it through a system, and then they give you a result, and then you just take it and go. The only way they can help you to reduce taxes is trying to remove some of your income, which is killing you because it doesn't give you access to other people's money. Or they are putting a lot of expenses, which reduces your net income. I mean, those are not the ways of basically avoiding taxes. There's a lot in the tax code. So my thing to you again is, you have to learn and work with people who give value, understand what a tax return is. Many of us have stayed in the rat race for too long because we're just working with the wrong people. We're working with people who don't give us any value. You don't even talk to them for a year, because what are you talking about with them? The only thing they know is to produce numbers and get it out. And then you pay, our mindset has always been that tax return, I can do it for 150, for one this. I don't do it for that amount, because I educate you on what it is. And I give you value, I make you save money the right way. And I give you access to other people's money. That's what we do. So what we do is strategy. My firm is focused on strategy. My firm is focused on strategy about your finances, strategy about your generational wealth building, strategy about your estate and transfer of estate, strategy about how do you protect your assets. It's all about strategy. That's important. That's basically what I have to say.
Wow, that's a lot for me learning. I'm learning as I'm going. I'm one of those people, who work for ordinary income. But I think with that information, I'm beginning to think differently, and I hope that people who are watching this will also try to start thinking differently. I mean, like I said, the purpose of this show is to learn and be informed and be inspired and transformed. So how can people get to you to be educated?
Easy. I mean, I more and more we're doing a lot of conferences. I do a lot of webinars. I'm very active on social media. I'm very active on YouTube, all these social media. And also I speak at various meetings. People invite me to speak and I talk to them about these things because I think my biggest thing is to see everybody get to their American dream. We know one thing, we know we are working so hard. We're working so hard, but we're working so hard, we're working the wrong way. That's why so many people at some point they say, I know I want me again, because if I work all my money, then they say they take my money. I don't want to add hours because I add the hours, I don't see the hours. That's normal. That's the way it is. So if you want to contact me for us to work on these things, to talk about these things, it's easy. If you go to my website, you can book an appointment with me anytime. It's www.chnadvisors.com. You book an appointment and I have free consultations, I have free 30 minutes for anybody who wants a discovery call with me. We talk about it, and then now we start looking at strategy, how we can help you. Most people who are out there, my target population is, first of all, the people I generally work with are people who are, if you are out there and you are paying over $50,000 to the IRS a year, I'm interested in talking to you. The reason is I can save you that money. $50,000 to the IRS is worth at least maybe $400,000 worth of real estate. And that's an asset that's going to make you even save more money. If I can save you that money and then we put it in real estate, then you start building that real thing that they call assets, and those assets will help you save more money. And then, if people who are making multi-million-dollar money a year are not paying taxes, for the last 20 years, people like Donald Trump did not pay a dime in taxes. And I'm not talking about politics here. I'm talking about reality. They did not pay a dime in taxes until 2016, when Donald Trump paid how much? He paid $750 in taxes.
Right.
That's a man who's a billionaire, is making hundreds of millions of dollars a year. And his tax bill is $750 in the one ordinary year that he pays taxes. It tells you there's something. Elon Musk did not pay any taxes for many, many years, until 2021. When he decided, he told people that maybe I should pay some taxes. Then he decided that he was going to exercise his options, and then sell some of the stocks. When he sold them, he paid taxes. So taxes are something that you can avoid using the tax code. And I tell people, first of all, is structure. If you don't structure correctly, you're going to lose money. I talk to a lot of people who are just W-2 people. W-2 people tend to have it hard to save on taxes. But there are ways of saving on taxes. There are so many ways. And that's why I tell people, I enjoy when I start working with clients at the beginning of the year, because I can save you everything. If you come partway through the year, maybe there's certain things that we've missed. We're starting a new year. It is the best time for us to start working so that we can help avoid those taxes for you. And then invest in real estate. My typical people, my typical clients, every one of them buys at least one real estate a year. And they don't buy it by accumulating other money. They're buying it with the savings that we have in taxes. We take it and convert it to real estate. Because real estate is that, think about it. We are in a quadrant. When you think about the cash flow quadrant, they will tell you that the first box is employees. Employees pay the most in taxes. Then the second box is entrepreneurs. Entrepreneurs, they have the advantage of reducing their expenses. Employees cannot reduce any expense. It's gone. Once you are an employee, you don't have any expense to write off. Everything you're expending you can write off. So when you become an entrepreneur, now you have a business. You can basically reduce your expenses. You can reduce your home office, your inputs, all those type of things. Then now you have a net profit on which you pay taxes. If you're not properly structured there, you might pay an additional 15.3%, which is called self-employment tax. Then you want to run away from there and become a structured business, a corporation. In America, corporations pay 21% flat rate in taxes after reducing all their expenses. That's already a big thing. But if you want to be where you want to be, what they call the El Dorado of taxes, you want to be an investor. And an investor is that guy who's investing in real estate. Is that guy who's investing in passive activity, accumulating assets, buying interest in stocks, buying interest somewhere. And real estate remains the biggest bird that you can really wipe off your taxes with. So once you invest, people who are in real estate, they shouldn't be paying a dime in taxes. If you're out there, you are in real estate and you're paying a dime in taxes, your CPA should be fired because there's something he's doing wrong. He's doing wrong. If you're an active real estate investor in this country, you shouldn't be paying a dime in taxes. And that's exactly what I was saying when people were saying Donald Trump doesn't pay taxes. This guy acts, everybody knows that he's a real estate investor. Why should he be paying taxes? So basically, when you become an investor, you're in that El Dorado of taxes. Most investors in that fourth quarter, they pay zero in taxes, 0% in taxes. That's why millionaires and billionaires, they don't pay no taxes.
Well, folks, guys, the past half hour or so has been very interesting, informative. We are going to put the link to Mr. Njoya's at the bottom of this reel, and then encourage you to get in touch. I will.
Thank you.
Get in touch and learn as much as we can and take advantage of the system.
Absolutely.
I want to thank you very much for giving us this time to sit down and be educated. And I hope to see you on the other side.
Thank you, sir. I really appreciate it. I like the fact that you are working with your kids. I enjoy that. The tax code tells you that one of the main advantages of having a business is to be able to work with the employee or family members. That is the tax code. And the reason it says that, I don't know if you have a minute for me.
Sure.
The reason it says that is because there are huge benefits in the tax code for those who can understand it for working with their kids. In Texas, for example, there is no limit. There's no age limit for you employing your kids. As long as they are your kids or you are their custodians. You cannot just go, I cannot sit here and employ any child who is less than 14. I cannot employ them in this company. But I can get my children work for me even at the age of 7 in this company. And when your children work for you, and listen good, because this is a very, very big tip I'm giving you. When your children work for you, the first thing is you want to make sure you are paying them. I'm not saying that you give them money to go and spend. You are making sure that you're paying for their time. And the reason you're paying for their time is now, some of the things that you do for them, they can be taking money out of their bank accounts and doing the same thing. That's basically the money that you were going to spend on buying the clothes. They can take it from their bank account and then you guys buy the same clothes. So the money is not going anywhere, it's there. But it's going to their bank account for the work that they did. That's number one. Number two, what does that mean? The standard deduction in the US since 2017 with the Tax Code and Jobs Act, the standard deduction in America is gone up. It went up, it currently is $12,950. That's the standard deduction for every normal person. What is standard deduction? Standard deduction is that amount of money that you earn and you don't pay any taxes on it. So for normal people, any person, any single person, and when their ages are over 50, it's even more. But for any normal person, if you earn anything less than, in 2023, less than $12,950, you don't pay no taxes on it.
Wow.
So basically what that means is that if your business is making $100,000 or $100,000 in taxes, and you're paying your children, you have 2 children who are actively working for you. Those 2 children, if you were paying them up to $12,900, that's about 24,000 or 25,000 and some change. 26,000, almost 26,000. So 26,000 you're removing from your taxable income and shifting it to your kids. And now the kids are receiving it as income and they're not paying any taxes. So that money that you were supposed to pay for their fees, pay their this, pay their that, it can be taken from their bank account and paid. And now the government is helping you pay for your children, feeding, everything you want to do. That is a very big, if you were in the, let's say you were in the 30% tax bracket, you were in the, let's say 30%, if you were in 30%, tax, your effective tax rate is 30%. And then you move out 23,000 or 26,000.
26,000.
You move it down, multiply it by 30%. That 30%, you just save yourself about $6,000, $7,000 in taxes, just by doing that. And the children don't pay any taxes. And what is more interesting is how much you can build wealth with that. As long as that money is paid to the kids and it's going through their bank account, there is something you can now take that money from their bank account and open a Roth IRA account for those kids.
Wow.
The Roth IRA limit, the maximum you can contribute for a kid, for any person in a year when you are less than 50, is $6,500 as of 2023. If you put in $6,500 for this kid for 1 year, you're going to put it in a Roth IRA. How old is she?
She's 15.
She's 15. By the time this child is graduating, is retiring at the age of 59 and a half, that one payment that you paid in a Roth IRA and it's growing at, let's say it's going it's growing at it's growing at 7-8% Roth IRA. It's compounding. By the time that child gets to 59 and a half years, that money is about $1 million.
Wow.
Sitting in there for her. And that's just one payment. If you did it twice, you did it thrice, you did it 4 times, imagine what this child gets when she retires. Millions of dollars. And that all of that money, because you paid it out of after-tax money, it is tax-free. When you put your own money in your traditional, in your normal 401k, it grows tax-deferred, meaning every time you take it, you're going to pay taxes. But her, you invested $6,500 and you're taking $1 million tax-free. If you had invested that $6,500 with before tax money and you're taking $1 million, that $1 million you can only, it means that $1 million at 30%, she's going to pay $300,000. And if she's in a state where there's state taxes, you can pay more than half of that money in taxes. So now, that is the way we build wealth for kids. We build generational wealth for kids that is tax-free. So that child will not worry. That's why most of the people around here, some of them, they have trust funds, they have money inside. They don't have to worry like me, like you and I, having to work on some crazy days, Saturdays, Sundays. Yes, that's what we do for our kids. That was a tip. Just wanted to throw out there.
Thank you very much. And also for anybody who has kids, hey, I heard,
Yes.
and now I know.
Yes.
Like I said, I'm going to come back and see you for in-depth talk. And I hope that all of you out there who listen to this talk get inspired to be or to get in touch with Mr. Njoya.
Yes. Easy. You can contact me. You can follow me on YouTube. You can follow me on Facebook. Facebook, you just type my name, Charles Njoya, or you look for CHM Advisors. We are there. Follow us on Instagram. We throw a lot on Instagram. At times we feel like, okay, we're throwing it to, nobody's reading it, but people are reading it. People are getting it. Mm-hmm. The important thing is to give the information out, let people, and I hope people are getting it, and it's changing mindsets. Yes.
Thank you very
so
much.
much. Yeah.
I appreciate you.
Thank you, sir.
All right.
Thank you, sir.
All right, folks.
Yes.
Until next time, please stay tuned, like, share, and subscribe. Thank you.
Thank you.